Hey there! Today I will be talking about why Pakistani farmers need credit. Let's start with rural financing. Rural finance, as defined by the World Bank in 2004, includes a range of financial services such as savings, credit, payments, and insurance to rural individuals, households, and enterprises, both on farm or non farm, sustainable basis. It includes financing for agriculture and agribusiness. Credit is the backbone to start any type of business activity. Rural credit is classified as three different types of loans. The first one is called short term loan, which is needed for meeting the annual production costs of the farm, example seeds, pesticides, fertilizers, etc. The second type is known as medium term loan, which is required for other expenses such as purchase of livestock, improvement of water courses, etc. Whereas the last type of rural credit is referred to as long term loan. This is needed for a more long lasting purchase, like purchase of additional land, repayment of old debts, etc. Now, let's dive a little deeper into the history of farming in Pakistan. Pakistan is basically an agricultural country, and finance has been needed for its rapid development. Over the past few decades, many efforts have been made by policymakers to increase the supply of credit to farmers. With a view to meet this basic need, the Agricultural Development Finance Corporation was set up in 1951 and was entrusted with the task of providing financial facilities for the development of agriculture, poultry, animal husbandry, fishery, forestry, and dairy farming. After 1972, the agricultural formal credit flow to smallholders grew rapidly when commercial banks entered into the rural financial credit market. Under the supervision of the State Bank of Pakistan, all commercial banks have been providing agricultural loans to the smallholder farmers. To provide incentives and protection to all commercial banks, agricultural formal credit disbursed by all commercial banks was covered by guarantees from the State Bank of Pakistan, about 50% of their losses. In the 1980s, the government of Pakistan approved another agricultural loan scheme called Production Loan, under which all commercial banks were asked to disburse interest free production loan to small scale farmers. Formal agricultural credit increased with the passage of time around 27.5% per annum. Now, let's talk about different types of credit. The formal sector constitutes banks regulated by State Bank of Pakistan, that is, Zarai Taraqqiyati Bank Limited, commercial banks, and Federal Bank for cooperatives. The informal credit comprises of two sectors, that is, organized and unorganized informal sector. The organized informal sector consists of committees, shopkeepers, money lenders, traders, commission agents, etc., whereas the unorganized informal sector consists of friends and relatives. These sources, however, generally lend for short periods and charge an exorbitant rate of interest. Now, let's see the differences between the two. The formal sources of loans that the government registers are followed by laws and regulations. The informal sources include all small and scattered units that are generally beyond the government's control. They must obey its laws and regulations. Social welfare is the primary motive for formal sources. The profit making is the primary motive for informal sources. Formal sources typically charge lower interest rates, whereas informal sources charge much higher interest rates. The documentations procedure is quite lengthy for formal sources of loans, whereas the documentations procedure is not as lengthy as compared to formal credit. However, in the rural areas of Pakistan, small scale farmers are not obtaining their due share, including share of total agricultural credit disbursed because of less accessibility of credit from formal sources. Let's explore some of the reasons why farmers go for informal credit. Small farmers do not have direct access to the formal lending institutions. Hence, they are trapped in the net of informal lenders. Formal sources of credit are very limited in the rural areas. There is a lack of availability of credit for consumption purposes and are provided only for investment and production purposes. Likewise, financial institutions have not approached the farmers because of poor agricultural credit disbursement network. The reason behind the lack of attention of financial institutions towards the farming sector is because of the highest number of non performing loans and bad debt in the sector. The institutional loaning agencies have the view that the absorption capacity of the farming community is not improving significantly because of lack of innovations in agricultural based rural economies. But contrary to this, complicated and dilatory procedures are hampering the growth in credit disbursement. Small farmers or tenants are becoming hesitant to avail loaning facilities from institutions due to cumbersome procedures. Formal sources require farmers to pay high transaction costs, which include application fee, form filing fee, and registration fee, etc., in order to acquire a loan. Despite all these challenges being faced by the Pakistani farmers, there need to be enough opportunities for farmers in Pakistan to help them prosper and help the economy of this country. Thank you for taking out the time to watch this video. I hope you enjoyed it.